It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
I think really for Australia though, and Australian real estate, it probably affects our interest rates or what the RBA is thinking. And I think that means that the RBA will be a little bit more cautious given these global risks.
And that is Matthew Tiller joining us on the Real Estate Breakfast this morning, and welcome back to another episode, your largest property podcast library in Australia. Yes, over 1,000 episodes for you to surf through. I think it's hovering around 1,200 at the moment as we talk property from Townsville to the Gold Coast. And good morning if you are in either Townsville or the Gold Coast this morning. You can stream us on multiple platforms. They include Amazon and Apple Podcasts. And this was the news from yesterday's RBA announcement.
Good afternoon, Craig. And look, the RBA has held the cash rate at 4.10%. I don't think that's a massive shock to everybody. I think people were thinking another rate cut would be nice, but there's been one, maybe the next rate cut's down the track a little bit. That's what's played out. The cash rate stays at 4.10% today.
So that is what happened yesterday afternoon. It is a Wednesday morning, if you were wondering, April the 2nd, as we catch up with Matthew Tiller, the Head of Research and Economics at LJ Hooker. And good morning to you, Matthew. Welcome back to the Real Estate Breakfast. It has been a while. How has your 2025 started?
Yeah, good morning. Thanks for having me again. It's been a very busy start to the year. I think everyone's really interested, as always. It's what's going on in real estate, and markets really have been changing and evolving since we last spoke.
That is for sure. Now we say, how has your year started? But here we are in April the 2nd. Yesterday we were in Melbourne. We were talking to Alex Stefanowski, a director from Woodards in Doncaster in Melbourne. They're talking about opportunities in Melbourne. And we're going to sort of stay in Melbourne this morning. First, though, I want to ask you the question about whether or not property prices in Australia are set to rise. They could climb in the next 5 years as demand outstrips supply. Definitely there is that slowdown in construction, population growth and rising wages. They do kind of conflate together to create the perfect conditions for price increases. So what do you think about all of that?
Yeah, absolutely. I think prices will continue to rise over the course of the next 5 years. If we have a look back at what occurred over the last 5 years, I don't think it's going to be as strong as what we have seen. I mean, national property prices have risen by about 40% over the past 5 years. Capital cities up about 35%, regional markets up almost 60%. So I don't think we're going to see prices grow as fast or as strong as that. Given the ultra-low interest rate environment with which those price gains occurred. But definitely, the pace of growth will be shaped by affordability, your construction levels, and population growth.
I was talking to you just before we got started and suggested that some economists believe that Melbourne may lag due to higher unemployment and investor taxes. You're kind of, 50-50 on that?
Yeah, well, I think that lag has actually occurred over the past 5 years. I mean, prices in Melbourne only grew about 8.2% according to CoreLogic over the past 5 years, while Sydney was up almost 30%, Brisbane up almost 70%, Adelaide over 70%, and Perth up 75%. So we can see that Melbourne really has lagged over the course of the past 5 years. But I think, this underperformance is probably actually its biggest strength going forward. Prices are cheaper, there's less affordability pressures, and that sets the stage for a bit of a turnaround in Melbourne, which we are seeing at the moment. We've seen investors jump back into that market over the course of probably the last 6 months with those slower price growth, but still strong rental growth, producing pretty solid or pretty good rental yields in Melbourne. So I think, it's going to see some potentially some good growth over the next 5 years.
Yeah, and what about the high taxes? Do you think that people have just kind of got used to those taxes now? They've taken them on board, they've adapted, although you still have the weak migration that potentially could hold Melbourne back a little bit.
Yeah, I think the high taxes has been a challenge for Melbourne probably over the last 2 years. And it did see investors that purchased before those tax increases and regulation increases came in, have seen them sell down some properties within Melbourne. But I think now and over the course of the last 6 months, property investors have obviously taken that onto account, taken the new taxes and regulations on board and built them into their feasibilities and done their due diligence, and they've planned accordingly. So I don't think taxes will hold it back more than what it probably would have in the past, but it'll be a concern for some buyers. But yeah, I think the population growth and the economic performance of the state may just hold it back a little bit when combined with property tax and regulation increases.
All right, we're talking to Matthew there, and coming up in just a moment, we'll get into this whole global event, whether or not there will be events that will shake up the market. We'll talk about that after this.
Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions.
And we have heard of these cases, Rebecca, where somebody from a Brisbane has decided to up and leave and go to Melbourne. Now, you're there in Logan. You don't want to hear that. You want people to go to Logan, of course, and buy in your area. But it is attracting people from Queensland to make the move.
100%. I've seen it actually quite a few times now. It obviously was quite the opposite in amongst COVID. We were getting all those Melbourne people relocating up here. But yeah, over the last probably 12 months, I've actually had quite a number of clients relocate back to Melbourne, whether it be to build or just secure something else for an investment.
Yeah, part of the problem is when you have a look at this figure of Brisbane's entry-level house prices, they have jumped by $300,000 in 5 years. I mean, that's pretty reasonable.
Yeah. At the same time, I guess 300 grand over 5 years, it's a hell of a lot of money for someone to be able to try and save to get into the market.
Ready to take your real estate knowledge to the next level? So are we.
And it is a Real Estate Wednesday, the middle of our working week. We're talking to Matthew in terms of what is likely to happen across the different markets, in particular Melbourne, and want to drill down on what you think there, Matthew, about global events, whether or not they're going to shake up the market with a potential US recession being talked about. And all of that uncertainty in the US. Australia's property market faces all of those external risks, of course. Investors might pull money from stocks and put it into real estate, keeping prices up. What do you think? What's that global event shake-up likely to do?
You're correct there in saying that, investors will be looking at the relative stability that real estate offers compared to stocks, and definitely, with the US stock market down significantly since the inauguration of the new president, I think real estate does have a home for that, some of that capital. I think really for Australia, though, and Australian real estate, it probably affects our interest rates or what the RBA is thinking, and I think that means that the RBA will be a little bit more cautious given these global risks. I think we still will get a cut or two, which will help buyer sentiment and help drive the market. The RBA will, keep their powder dry, so they do have a bit more ammunition in the bank if there is a bit of a global shock, because cutting too early would leave them exposed and leave them with little ammunition to help stimulate the economy if US does go into recession, if the global economy does slow down too much.
Yeah, I can't see how the US is not going to go into a recession because of these trade tariffs, and a lot of confusion in the US where people just don't realise that the locals, anybody inside the US, they're the ones that are paying for the trade tariffs. Now, Trump says, well, I'm going to slap 25% on Canada and Mexico and all these other countries, but it's the population of America and the importers that are going to pay for that, and that is going to wreck the economy. You're right, the Dow Jones at the moment is completely tanking, and I'd say that that's going to tank even further.
I definitely think it's going to see the global economy slow down. But for Australia, I think it's really, China's the main market to look at there. Obviously, that's our key export, a key driver of the Australian economy. And given, China does export a lot of their products to the US, the slowdown in the Chinese economy will have an ultimate effect here in Australia, particularly in our mining sector. And we'll see, that GDP result probably soften again as the Chinese economy slows down as well, with the US economy going into recession.
Yeah, I think one of the benefactors is going to be Australia when you look at the numbers of Canadians now that are saying we are not going to the US to holiday. So they'll be looking at other markets, and Australia will definitely pick up a share of that for sure. All right then, well, good to chat and to catch up with you again there, Matthew. Enjoy your Wednesday. Let's see what happens in the next few months. Fingers crossed for all that positivity.
Absolutely. It's definitely going to be an interesting few months. Looking forward to chatting to you again when some of these things work themselves out.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
I think my best was seeing a horse on a third floor in an apartment, so it probably beats that one.
Well, hang on, you got to tell that story. You saw a horse in an apartment?
Yeah, we had a jockey that had gone a little bit mad in Kingsford and thought it was a good idea to bring his horse home.
Is this a real story, or is this a wind-up?
This is a real story. It's nearly a 20-year-old story, but it's definitely a real story.
What, you walk in and you see the horse and you go, something doesn't quite feel right here?
There was a complaint, so we were there to address the situation, but yeah, it was pretty wild. I've always said it'd be a really good book, the diaries of a real estate agent and the things that we've seen in open for inspections or properties that we've managed. You would recommend buying one block and doing something special with that?
You build it for about $1 million, potentially 1.2. It's cost you $2.5 million if you're following me. After that, you sell that brand new home after about a year or so of living in there, so hopefully you're not paying any CGT, and you've just made $1 million tax-free. You haven't had to go through council for plans and permits, because it's only one dwelling. The build process is only taking you 6 to 12 months, and you've got your money within 18 months.
We connect you to the best real estate information across Australia. The Real Estate Podcast.